for me, I'm not convinced that Bitcoin has bottomed, even if it remains higher in the dominance factor. Could it be that the altcoins are still headed much, much, much lower? Bitcoin may come down a little bit, maybe retest that 15.7 or even go lower level.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
The question I would have, and a lot of people are wondering, like, has Bitcoin bottomed? So for me, I'm not convinced that Bitcoin has bottomed, even if it remains higher in the dominance factor. Could it be that the altcoins are still headed much, much, much lower? Bitcoin may come down a little bit, maybe retest that 15.7 or even go lower level, but it still increases the dominance in there.
I don't know what way it's going to break. It might actually depend on regulatory clarity. What do you think?
Yeah, I think that, from my perspective, is definitely Bitcoin's on that track to be that digital gold asset, and I think Ethereum is likely the silver kind of the crypto markets. And what's interesting about gold and silver, right? So gold is your pure play, where it's just a store of safety, inflation hedge, all that kind of stuff. And then Ethereum is like silver, in that silver is more volatile than gold. So Bitcoin is less volatile and Ethereum is more volatile than Bitcoin. But also Ethereum has a use case, right? Bitcoin, there's, you don't really see a lot of stuff being built on top of that. So I think my guess is, and again, I could be wrong here, but my guess is the future is those two make up probably 80% plus of the overall market. And then you might have some of these other smaller coins kind of carving out their niches, but it's hard to know. I mean, and now we have the biggest news in the last week was that BlackRock filed for ETF, right? And so the question is, and I think the big question, we saw a little rally in crypto because of this, is does this mean, because there's such a mega financial institution, that they talked to Gary Gensler, and Gary Gensler might have said, hey, listen, yeah, Bitcoin isn't a security, so we're going to give you, the biggest financial institution, the green light. Because I think if you look at the stats, right, BlackRock's filed for like 75 ETFs. They've gotten approved on 74 of them, right? So they obviously have this kind of ability to kind of say, okay, if we're going to do this, the probabilities of success are very high. Yet we've seen the SEC reject time and time again a spot ETF. So it's kind of interesting here. I don't have this sort of, I don't have this data, and it just, what you said just jogged my memory, or to think about this. But I'd love to know the dominance of gold and silver versus palladium, platinum, copper, in terms of that, like if I don't know if there is a chart of kind of looking at that, and do you look at it in the same way of value versus use case? I don't know, but just interesting to kind of look at that and say, okay, well, platinum's used in batteries, we know silver is too, but I mean, these other metals, I mean, copper's used in wiring, it's a massively used, but it doesn't have a high value because it's not a scarce asset, right? It's only $3 per unit. So anyway, just something I was thinking about there in terms of relating it to the commodity markets. What I do want to show here, and I'm going to flip over to my screen here, is I do want to go over that gold chart. A lot of people have been asking me, do you still see gold breaking out this year? We've kind of see gold languishing here. And the one thing I would just point to, and this brings us over to the stock market side of things, is that gold is stalling here. But what we're seeing is there's a massive inflow of bullishness into the market. So in general, when you see stocks like Nvidia going to new all-time highs and things, in general, you see gold falling more because it's a safety hedge, right? It's people saying, hey, I don't want to be in gold because I want to be in risk assets where I'm going to make more than a few percent on a yearly basis, which is more along the lines of what you expect from gold. And so I find it fascinating, and it's the same sort of thought process that I had when we were trading at the lows on gold in 2022 and going back to 2021, and the markets were at their highs. You weren't seeing, and by the way, this is when the Fed was raising most aggressively, and generally gold reacts very negatively to hikes in interest rates. Gold was not breaking down outside of this kind of choppiness. It got to this low end and then started to rally back. So for me, when I look at the price action in gold, gold is staying stable while you're seeing risk assets aside from crypto rallying substantially. I think the NASDAQ now is year to date up something like 38%. I mean, a massive, massive move. And so to me, this is a very bullish sign for gold. It's telling me that you have sellers that are moving out of gold to move into risk assets, but there's definitely buyers there, thus price is not falling. And in all fairness, I've been off sides on this. I mean, I was bearish over the last month or so, and the markets have just ripped up. So it's one of those things where are the masses, as they turn bullish and they're FOMOing into stocks. We hear that they've raised interest rates by X%, which has been huge. I mean, the velocity of the raise, I think, is the shocking part. From going from a quarter basis point to where we are above 5% is just massive. But then you look at how much excess liquidity there was in the system because of COVID. And then you look at, all right, wages have increased substantially, so people have more money. I do think, like you're saying, there are cracks emerging, right? So last Monday when we did the no-shill zone, we talked about the jobless claims from the previous week being 266,000. And that was the biggest jump since 2021 in people filing for unemployment. And what I was saying is last week to really watch the next number, because sometimes you get these outliers, the data changes this calculation and it changes the numbers. But what we saw last week was 262,000 filing for unemployment, just 4,000 people difference. And to me, that's now saying, okay, it's probably not an outlier. You're beginning to see the effects of people getting laid off and filing for unemployment. So that would be one thing. A couple other things I'm seeing here. U.S. delinquency rates on credit cards are now rising at their fastest pace since 2008, right? So now it's not at the level, right? So the rate of change is rising, right? That's what it's equal to, but you're not at those levels. Credit card debt now at all-time highs. And the reason why this is important in terms of credit card debt is because at all-time highs, if people stop paying their credit cards, it's a bigger deal to banks, right? So, if you don't pay your credit card and you owe $10 to the bank, okay. But if you own $1,000 and there's a million people that owe $1,000, now it becomes a bigger issue. And being at all-time highs is definitely unsustainable in the long run. The other thing too to just mention as I flip back to charts is that I also read that bankruptcies are now at their highest level since, I believe, 2011. Now, it's not at 2008, 2009 levels, but you're seeing again this shift. So for me, at least as an investor in stocks, in gold, in crypto, it's kind of the yellow light. You're not seeing the red flashing like, holy cow, we're going down with the ship, but you're seeing like, okay, there is a change going on here. And then the bigger question to bring back too is whether or not does inflation go back to 2% or under for the Fed, or do they get themselves in a pickle where we stick at 3% and it makes it very hard for them to bail us out whenever that big downturn comes?
I'm curious, what is your view here on the S&P 500 in terms of climbing the wall of worry, and do you think it will eventually break to the downside?
Yeah, so and this is a great point too, is so just first of all, going back to the Federal Reserve, I think it's important, and I've seen this narrative get lost, but it was around 3-6 months ago, which is that the Federal Reserve has never really engineered a soft landing, right? I mean, and again, so I think the market right now is like, oh, they're going to do it this time. It's almost like you're rooting for your team, but they haven't won the championship any past year, but you just willing to believe, because we all want to believe, right? I mean, we want to believe that everything's going to turn out good. That's human nature to want to believe that. So I think a couple things to look at here, going back to my chart here. I apologize. Let me add mine to the stream here. Is that number one, take a look at interest rates. And remember, the Fed basically came out and said, we are going to have to hike more this year. And the market was like, ha, dream on. We don't believe you at all. I mean, literally the market was like, nope, we don't believe you. But if you look at the 10-year yield, this is a very interesting pattern. This is actually a bullish channel of consolidation on the 10-year. And if it breaks above this 3.9 level, you're at least going back to 4.3 and potentially higher. And again, the question then is, how does that affect the overall stock market? The other side of the coin too is you can see that we've been holding these are two parallel lines. You can connect these lows here and it's perfectly parallel as well. So there's a lot of support down here, and you have this bullish channel that, again, eventually bullish. When you have a down sloping channel, the thought process is eventually price breaks out to the upside. You don't necessarily know when, but downsloping channels break out to the upside. So if that does happen, that puts me in a position where if we look at the S&P 500, you have to wonder, okay, well, are we going to get to all-time highs? And if we get to all-time highs, is it on this hopium? And again, markets can do that in light volume summer months. We can continue to rally. I mean, it's clear as day that we've been doing that right now with the narratives that have been pushing about this perfect landing. But again, for me, this is a situation where I would not personally feel comfortable buying in at Apple at all-time highs, Microsoft at all-time highs. And so at least from me, again, the one thing, the market has a tendency to kind of make you question yourself, make you almost want to flip. It makes most people flip from bullish to bearish or bearish to bullish just before it flips the other way. But the charts are the charts, and there's some major signals to me that we're probably closer to the end of this run in the S&P than not, as well as the NASDAQ. It's funny because I think the Fed is feeling their lack of, people's lack of trust in them, right? I think when Jerome Powell came out last Wednesday with the FOMC statement, and the markets initially dumped out when it was like, oh, we're going to still hike. I think it was about 66% of the board of the Federal Reserve said we're going to do 2 to 3 more hikes in the year. And the markets initially sold off, and then the markets shrugged it off and rallied up the next couple days. And it's really saying, all right, you can tell us you're going to hike. We just don't believe you. We don't believe that the Fed will ever step fully away from the punch bowl or the money printer. And it's a credibility issue at this point. And then the question is, as the markets go higher, and granted, this isn't for crypto, but there's a wealth effect that adds to inflation, right? So, I always tell people this is they say, well, if the stock market goes up, does it potentially add to inflation? And the concept is that if you look at your 401k and it was 200,000 yesterday, and let's just say it's 400,000 today, and you were kind of thinking about a new car or a new TV, you're much more likely to say, yeah, let me go buy that new car, new TV, because look at my 401k, it's up massively. And so that's the reason why the Fed is more focused on the stock market and wanting it to come down. But right now, they've lost that credibility.